Lucid is being bought by the three largest asset managers in the entire world. So over the past quarter, we had Vanguard increase their holdings by 25%. We had BlackRock increase their holdings by 32%. We had State Street increase their holdings by 35%. And for those that don't know, basically what happens once a quarter is these large asset managers must disclose their holdings. So we got that earlier this month, and this showed that the largest asset managers in the world are buying the dip on Lucid. And we also saw Geode Capital Management increase their holdings by 25%. So there's a lot of different firms here buying more stock. Northern Trust increased their holdings by 27%. These are huge asset managers, and it's a great sign to see that they're buying more of the stock. Although I will caveat this with they are passive indexers. For those that don't know, basically they just simply buy the entire market. So they are usually the ones buying stocks when shares are moving lower, just to kind of right size their holdings. So that's standard, but it is good to definitely see that this is happening pretty significantly in Lucid, and these large passive indexers aren't giving up on the stock, because that does happen too. When let's say a stock becomes non-compliant with their exchange requirements, well, that's typically when a passive indexer will sell out. Stuff like that will get a passive indexer out of a stock. And we can also see other investors like Bali Asset Management does own some puts, but we also see Bank of New York Mellon increase their holdings by 34%. So very interesting there. And then what I'll do in this video is I'm going to go over some short interest data. There are some short interest numbers that are implying a massive move for Lucid. So I'll go into those. And at the end of the video, I will give a price prediction based on technical analysis. So with that being said, let's keep it moving here. So yes, the largest asset managers in the world are buying the stock, but short sellers are also still very heavily in the stock. So we have 23% of the float sold short, and then we also have 8 days to cover. For those that don't know, this days to cover number tells you how many days of average volume it takes to cover the shares that are sold short. So in this instance, it takes 7.7 days of average volume to cover the shares that are sold short. Typically, we look for a 10 number to kind of signify a high likelihood of a short squeeze. So right around 8, basically signaling a decent, a decent likelihood, you could call it, for a short squeeze. But really what screams a short squeeze to me isn't the days to cover, isn't the short interest as a percent of float. It's actually the failure to deliver numbers, which are extremely high at this point in time. So once again, just kind of give you a brief summary of this. So failure to deliver basically means that a short seller is failing to deliver the shares that they have shorted back to investors. So when this happens, it basically means that a short seller is giving you back a digital copy pretty much of your stock, and they actually have to buy that stock still in the market. So this 1.6 million share number tells you that within the next 60 days, there's going to be 1.6 million shares bought of Lucid. That's just fact. If they don't actually buy those shares within 60 days, the SEC comes after them. So it's a legal obligation that they have to buy these shares within 60 days. So this 1.6 million number is pretty high, and it's actually the highest number since January. And for those that have been in the stock for a little bit, you might remember what happened in January. Shares, they rose, they over doubled, right? So, up pretty much 300%. So the last time this short seller, this short interest data point was this high, shares increased by 300% over the coming weeks. And we're actually coming down to test the same major level of support at around $6. So we're at that same price. We're seeing similar failure to deliver numbers. Well, that leads me to believe we could see a significant short squeeze over the coming weeks to months for this stock. So that that is kind of my thesis for, calling out a short squeeze in this name. This isn't just like a clickbait video. I do have some stats and some TA behind this. So I'll go into the technical analysis a little bit more in a second here, but I just wanted to cover some of the financials for this stock just to kind of slap some sense into you, because I do want you to know that this is a very highly speculative investment, just from a fundamental standpoint, not talking about the short interest, not talking about the chart, just talking about the pure fundamentals of this company. It is a speculative investment. Just get that through your head. It's the reality of the situation. Yes, there have been speculative investments in the past that have completely transformed portfolios for asset managers and individuals, right? So not saying that can't happen here, just simply telling you what the facts are saying. But what I do like to see when we take a look at the financials is that this company has a pretty healthy balance sheet, and we'll look into that. So we have $5.2 billion in cash for this company, and that's compared to $2.3 billion in debt. So net, we have $2.8 billion more cash than we do debt. And that is obviously a good thing for the company. But, with net operating cash flow for the past 12 months at $2.7 billion, we're going to need some more cash here pretty soon in about a year or so, right? So, be on the lookout for some share dilution, or possibly, maybe they go to the debt markets and get some financing that way. That would be kind of the more ideal scenario. But with rates as high as they are, it would seem as if a shared dilution event is somewhat likely. And then we can compare this balance sheet to Rivian, which has a similar balance sheet, basically has net cash that equals their net operating cash flow over the past 12 months. They kind of even out, right? So they have $7 billion more cash than debt, and their net operating cash flow for the past 12 months was about $6 billion. So overall, though, this is a better balance sheet than Fisker, better balance sheet than NIO, better balance sheet than those two, and then XPEV and Tesla have pretty good balance sheets too. So overall, Lucid has a pretty solid balance sheet. And then with that being said, though, let's take a look at the profitability metrics for this stock. So unfortunately, we have the worst profitability metrics out of all EV peers. So we look at Lucid, we have a minus 187% gross profit margin. For those that don't know, this gross profit margin tells you what a company makes for what it sells. So this is honestly worse than Rivian, and it is worse than all other peers. So that is a little sad to report. I don't get any joy out of that, but it is just the fact of the situation. Lucid has a pretty bad gross profit margin. Obviously, the logic, though, is, once the company is able to produce more cars, unit economics should help bring this number lower. And then in terms of growth, though, the company has pretty attractive looking growth. So the 3-year compounded annual growth rate is 409%, which is above all of the peers besides Fisker. So that's definitely a good number, though. So it's good to see that the stock has growth metrics to kind of rationalize this, extremely high valuation. And then 3 years down the line, we're projected to have a negative 8.4 times PE, so still unprofitable 3 years down the line. This is cheaper than Rivian, but well worse than Fisker, which has a 13 times PE 3 years down the line. Better than NIO, better than XPEV, and obviously Tesla is profitable and has a better overall financials than Lucid, obviously. So with all that being said, the company traded at a very steep valuation. Growth metrics are somewhat backing that up, and then we have profitability metrics very poor relative to peers, and then the balance sheet is a good one and basically in line with the peers. So with all that being said, though, let's take a look back to the chart. Let's jump back in this chart and see if we can't give a logical price prediction. Obviously, we kind of went through my thesis on why the stock could see a short squeeze over the coming weeks. I do definitely think that is very likely. And one thing I like to see here is that we're coming down to test support, as I'd said, around $6, which is where shares had bottomed in early August. It's where shares had bottomed about in June as well. It's also where shares had bottomed prior to that short squeeze in January, which leads me to believe that this level will likely hold once again for Lucid, and we'll see a move higher over the coming weeks. The question is, where do we go? Well, in terms of a high confidence, move, you could really say that the next major level of resistance is at around $8, which is where shares had topped out in early 2023. It's also where shares had topped out in June, where shares had topped out in May, where shares had topped out in March as well. So a quick move from 6 to 8 is definitely the higher confidence move. But obviously, if the short squeeze plays out, like I think it could, we could see a move all the way up to about $18, which is where shares had topped out in late January. So definitely some massive upside for this stock. And then, I won't even cover this because we only have two years of data. So with that being said, I hope you enjoyed the video. Massive upside in this stock. Obviously, the financials look pretty poor, so go in knowing that. But if you go in knowing that and you kind of are nimble in this investment, I do think Lucid could be a very good at least trade for you. Also, it's worth noting that as shares have kind of declined for the month of August, we've seen volume slump off. Anytime you see volume slump and prices slump, that usually means that we are about to see a price reversal. So, that's just typical volume kind of analysis, if you will. So, as prices drop and volumes drop, that is implying that we could see a trend reversal for the stock in terms of price movement, which obviously implies a move higher. So, all that being said, technicals are pointing to this stock as having a high likelihood to move higher over the coming weeks. Obviously, if the market tanks, 20%, it's not going to matter. The stock's going to move lower. But with that being said, I think all else being equal, Lucid should move higher over the coming weeks. So with that being said, the 3 largest asset managers in the world are buying this stock. Should you? That's a decision you're going to have to make on yourself. Do your own research. But with that being said, I hope you enjoyed this video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.